They can freeze your bank account starting March 1, 2026. On March 1, 2026, regulators quietly tightened multiple parts of the U.S. banking system. There were no headlines, but the changes increase monitoring, reporting, and compliance across banks, fintechs, credit unions, and real estate transactions. If you use bank accounts, direct deposit, Zelle, LLCs for property, or credit unions, you now operate in a tighter environment than in February. The tightening arrives in 6 major areas. First, ACH fraud monitoring rules from NACHA require enhanced risk-based detection beginning March 20, 2026. Banks must raise sensitivity on automated systems, so sudden changes in deposit or spending patterns are likelier to trigger freezes and reviews. Second, capital and supervision adjustments mean heavier regulatory scrutiny, lower risk tolerance, faster account reviews, and more false positives. Third, fintechs expanded residential real estate reporting, increasing transparency and documentation for entity purchases and beneficial ownership. Fourth, the FDIC updated digital disclosure rules so institutions must clearly show FDIC insurance across apps and sites. Fifth, the CFPB tightened PACE financing disclosures and protections. Sixth, the National Credit Union Administration extended an 18% loan rate cap for federal credit unions through September 10, 2027, while payday alternative loans remain capped higher, preserving some lending access but signaling tighter risk pricing. What this means practically is more automated checks and less tolerance for unpredictable behavior. Examples: an unusually large transaction, multiple uncommon deposits, or faster cash movement compared with your history can trigger holds. The system often freezes first and asks questions later. Frequent declines or sudden blocks may increase. How to adapt: 7 concise steps. Separate business and personal accounts. Keep documentation for large or unusual deposits. Pre-notify your bank before large or atypical transfers. Ensure beneficial ownership and entity filings are accurate and up to date. Enable real-time alerts for transactions. If borrowing from credit unions, compare rates and terms under the 18% cap. Avoid unnecessary cash deposits and keep activity predictable. This is not panic content but awareness. The system recalibrated toward visibility, automation, and documentation. If your finances are clean, organized, and predictable, you'll face minimal friction. If activity is variable or business-like in personal accounts, you'll see more scrutiny. Stay proactive, be transparent, and keep records to reduce delays and false positives. Comment the word aware if you plan to act on this and subscribe for more clear, practical breakdowns of financial system changes.